everyone. You might have heard about the word postpaid. You heard it in the context of a SIM card, wherein you take a postpaid plan, you use the SIM, you use to make it calls, to use the internet or to send messages, and post the end of the month, you get a bill from your network carrier saying that this is the amount you owe the company, right? Which means that the company is giving you the facility to use their services without charging you anything, which in essence means they are giving you interest free usage period, right? Because they're not charging you anything for the 30 days wherein you did not pay them anything. And on a similar logic have come these BNPL or buy now pay later models, which is my topic for discussion today. So let's start our discussion. Multiple players, even our most famous Amazon or a Paytm or an Ola, they actually have ventured into the BNPL playbook. Amazon through Amazon Pay Later, Paytm through Paytm Postpaid, Ola through Ola Money Postpaid. So now the question arises, why is this playbook so enticing that these players are venturing into it? One, and second, are these players all that there is? So, answering the second question first, there are other fintech players who are doing this similar playbook. For example, there used to be a company called Zest Money, which has now shut down operations. There is LazyPay, there is a major player called Simple, and there are multiple others. So many, right? So all of these companies, in essence, have undertaken the buy now pay later as a playbook, which they are doing. So, firstly, let's understand what all things I think we are going to discuss in this video. Firstly, we need to discuss what is BNPL. Then we'll discuss how does it work and what are the benefits to all stakeholders. And within what is BNPL, I think we should also discuss why is it needed. So this is the broad context of my discussion today. Let's start with the first point, BNPL introduction to you guys. So buy now pay later, as the name suggests, buy now pay later basically means that you can buy something now and pay later. In the initial example of a postpaid SIM, you could use the facility now and pay later. So buy now pay later or BNPL, as the name suggests, is a playbook wherein the user is facilitated to buy something now and pay later. When I discussed about a postpaid SIM, what I told you was you are using the facility now, which means you're buying something now, and you're paying the network carrier a month later when the bill comes, which means you're paying later. On the same context, now understand if there is Reliance Digital, and let's say there's me, I take a mobile phone from Reliance Digital for 1 lakh rupees. Now, what options do I have? Right? The first option is I pay cash to Reliance Digital, in which case this agreement is closed. Second option is I do a UPI. Again, agreement is closed. I bought something, I paid for it. Third is I use, let's say with along with UPI, I can either use a debit card also. Third option is that I do not have the money or I do not want to pay the money upfront. In which case I have the option of a credit card. Most of you guys are aware about credit card. Some of you might not be aware about exact economics on which the credit card works. So let me start by discussing the credit card as a business model first. Now I am swiping my credit card at Reliance Digital. So let's say I have a Bank of Baroda credit card. Okay. So what happens is when I swipe my credit card, Bank of Baroda will pay Reliance Digital 1 lakh rupees. But to be honest, not 1 lakh exactly. there will be minor charges deducted from this particular. Let's say the bank deducts 200 rupees and pays Reliance Retail 99,800 rupees. This 200 rupees is what Bank of Baroda earns, and it is known as a merchant discount rate or an MDR. So Bank of Baroda will earn 200 rupees from this transaction by via MDR. And Reliance Digital in turn gets the money upfront, which in our case I would not have actually paid because I either don't have the money or I don't have the willingness to pay the money. And now with Bank of Baroda, I have one arrangement. What is that arrangement? Bank of Baroda has told me that Vaibhav, you have been given 1 lakh rupees as a loan or as a credit facility, and you have two options. The first option is that we are giving you, let's say, a 30-day interest free credit period, post which I will get a bill from Bank of Baroda that, hey, you owe us this much amount and this is your due date of payment, right? So if I pay my 1 lakh rupees within the interest free credit period, I will not be charged any interest. But let's say I do not pay within the interest free credit period, so I become what is known as a revolving customer. In essence, an interest paying customer. And what happens then is that if I'm not able to pay the amount of 1 lakh within 30 days, this 1 lakh is actually now my loan. And on this, I will end up paying EMIs to the company. So, what started as enabling me to purchase something ended up by me taking a loan against that. And this is how a credit card model works. For the now, let's just evaluate this particular thing from the point of view of individual stakeholders, which was my third point. What are the benefits for all the stakeholders? So let's start by discussing about me. What was the benefit to me amongst all this? I got to buy a mobile phone which either I could not afford, so I got to take a loan, or I got to buy a mobile phone which I could afford but I did not want to pay. So again I got a credit. That is point one. So let's understand this. For me, one is I get credit or loan, and second is from a credit card I can also get offers, right? And now within this credit also, actually I'm getting interest-free credit for a couple of days. So that also becomes a key element that I got a 30 or a 45-day interest-free credit cycle. What is the benefit to Reliance Digital now? See, Reliance Digital actually ended up paying 200 rupees on this sale, where it would have sold me for cash. And if I would have been paying cash, I would buy the phone for 1 lakh. But Reliance Digital actually ended up getting only 99,800 rupees. So what's the benefit for Reliance Digital? The benefit is that if I am a customer who cannot actually afford the phone, Reliance Digital would actually not make this sale because I could actually not afford it. So for Reliance Digital or for a vendor, the benefit when a customer uses a credit card is that the cust the customer will actually turn out to be a paying customer. The customer will actually make the sale happen for them. So sale happens is a very big factor for these companies. And to make this sale happen, they are okay to pay some MDR. Now on the MDR, just a quick understanding you should have. I am taking in this example Reliance Digital, which is okay to pay an MDR. But let's say if you go to a mom and pop store, and in that mom and pop store or a small store, you go and say that, hey, I'll pay by credit card. They will say that, okay, if you're paying by credit card, then in that case, for this particular commodity, we'll charge you 2% extra, which means that whatever MDR they would have to pay, they will charge you for that because they are not okay with getting 99,800. They want the entire amount for themselves. So in that case, they will charge you 1 lakh 200 rupees, and that 200 will go to the bank. So they'll finally get 1 lakh rupees. So in that case, you might have to pay the MDR from your own pocket as a customer, and the vendor will not bear it. This was just a side note. And lastly, what's the benefit to Bank of Baroda? See, the first benefit to Bank of Baroda is that again they also got some business. They ended up giving loan to me, which means their AUM increased, their disbursement increased, and their possibility to earn interest increased. Second, you have to understand that they gave me loan against my mobile phone, to be very frank with you, which means they actually ended up giving me a secured loan. So, by doing all this, Bank of Baroda is able to underwrite me as a customer, give me a secured loan, increase their AUM, and in turn generate possibilities for new interest income from me. This, and lastly, in terms of income, if I were to talk to you, firstly, they earned MDR on the transaction, the 200 rupees upfront. And second, there is a possibility to earn interest income if I'm a customer who actually defaults, which means I'm a revolving customer who does not pay within their interest-free credit period. So this is all in all arrangement. When I said the word default, that is not the correct word to use. If I'm a customer who's not paying within the interest-free period, then I become a revolving customer who ends up paying interest. That is what I wanted to say. And hence I give Bank of Baroda some business if I am paying via my credit card. I hope this is clear to you. So this is the context I gave to you for a credit card. And to be very frank, buy now pay later is very close, if not exactly similar to the credit card model. So actually, I should just do one thing. This is a credit card model. Now on similar lines, we can discuss the buy now pay later model. Now understand this. The transaction which I took as an example above, for example, Reliance Digital is an offline player, let's say. So, under an offline player, BNPL is also known as POS installment financing, which means that when I went to the Reliance Digital store and when I went to the payment counter, in their point of sale machine, POS machine, they will say that okay, the customer is taking a BNPL option, which is why BNPL is also known as POS installment financing, and in an online context, it is known as checkout financing. So let's say you go to your Amazon app and you add something to your cart. What is the next step you do? You check out. You check out and you get options to pay via cash, pay on delivery, pay via credit debit cards, or pay via again a BNPL play. So BNPL is also known as POS financing or POS installment financing or a checkout finance. These are just the names for BNPL model. Now again understand how BNPL works. Although you already know by now, but just to reiterate my discussion, there is Reliance Digital, there is me, and there is okay, just hold on. So now again I buy a mobile worth 100,000 or 1 lakh rupees. And now again, I am standing there and I'm saying, dude, I do not have the money or I do not have the willingness to pay, right? So now, Reliance Digital comes to me, says that, sir, you can actually take a BNPL option wherein you do not have to pay us the whole amount. You can pay us some part of it, let's say 25,000 rupees, and the rest amount will be paid to us by the BNPL player. So they will pay 75,000 rupees. Got it? But again, on that 75,000 rupees, the BNPL player will charge something to Reliance Digital. So let's say the BNPL player charges 1500 rupees. I'm taking 2%. Actually, above also MDR ranges from like MDR can also go to 2%, but I took a very nominal amount there. Here I'm taking 2% for the sake of calculation, which means I will get the Reliance Digital will get 73,500 from the BNPL player. And BNPL player in turn will come to me and say that Vaibhav, you owe us 75,000 rupees. And I will have to pay 75,000 rupees to the BNPL player. Now, the next question here is that how does a BNPL arrangement work? So for me, I will get the option for a zero interest EMI from the BNPL player, and the 75,000 rupees will be converted into EMIs wherein there is no interest factored in. So if I end up paying my entire due within the zero interest EMI period, in that case I do not end up paying any interest from my pocket, but post which there will be an interest period, and if I do not pay within the zero interest period, then interest is levied on my outstanding amount as well. So this is somehow similar to the credit card arrangement, just the difference is that this zero interest period is very high compared to a credit card. It can be 24 months, 48 months, and so on. But in a credit card, it is generally 30 days to 50 days, max 60 days is what I've seen, right? That is one part of it. And second, in a credit card, if you pay within the 30 days, you actually pay the entire amount. But in a BNPL, generally, you actually end up converting it into a loan and you pay EMIs on that. So, this is a loan arrangement directly in a credit card. If you do not pay it within the interest-free credit period, in that case, it converts into a loan. So, that is a small difference here. Now, talking from again a similar lens, what is the benefit to me? What is the benefit to Reliance Digital? And what is the benefit to the BNPL player? So, for me, again, I'm getting credit. And what did I write? Offer. Offer actually generally is not there a lot, so I can actually remove this as a point. Credit is a major factor here that I'm getting loan or a credit facility on my purchase. For Reliance Retail, again, sale is happening. They are happy with that. Sale is happening. We are okay to pay some MDR or some fees to the BNPL player. For the BNPL player, again, they are getting some business. So they are also happy. And next, they are also getting some income in the form of one is fee, which is in essence the MDR which they are charging to Reliance Digital, and second is interest income in case I do not pay within my interest free period. I hope that's clear. Now, one more difference is there. Sometimes what these BNPL players do is that they say, okay, hey, you take a zero interest EMI, but you pay us some processing fees. You pay us some processing fee. So they will say that given that you are paying 25,000 and we are paying 75,000, pay us something on that 75,000. Pay us a 2%. And given that I do not have money, I will be like, okay, take 1500 from me also. And in that case, they end up earning more in terms of a processing fee. So this was the fee to the vendor or Reliance Retail, and they will charge a processing fee to me as well, the end customer. This is how a BNPL model works. Now, just to build one more layer to our discussion, I told you what? That the BNPL player has given me a loan of 75,000 rupees. But if you have seen my previous video where I discussed the lending fintech business model, I told you that as per RBI norms, the BNPL player cannot itself give money. There needs to be a lending partner, a bank or an NBFC which can give money, and hence the arrangement is that I will pay the 75,000 rupees back to the lending partner, and then the lending partner will settle with the BNPL player. So there will be two routes here, and the lending partner is what stands in between me and the BNPL player. Got it? So if you want to understand more on this discussion, you should watch that video because I don't want to repeat the same thing. And this is in essence how a BNPL model works. Now, your question, which should come into your mind if it has not already, is why, firstly, is this BNPL model required? And second, what is the interest of a lending bank or an NBFC? On the first question, you should ask the question that if credit cards exist, why is a BNPL required? And that is a very fair question. I don't remember the point number, but let's understand more on the BNPL piece. So, firstly, why is it required? Let me answer this question to you. And again, it's a very interesting answer. See, firstly, when you have credit cards, right? Cre- uh, let's do one thing. let's compare credit cards versus BNPL. So that will answer my question on why is the BNPL even required. So firstly, you have to understand that when I told you about credit cards, I told you that there can be, let's say, 30 to 50 days credit period, interest-free credit period, but on in case of BNPL, it can go as high as 48 months, which means from a customer point of view, BNPL is a more lucrative option if a customer has to take finance as a route. Okay. Second, approvals for a credit card is hard, so hard approval, but for a BNPL, it is very easy to get an approval for a loan. I will discuss this even more. So if you think of it, when you have to take a credit card, the bank or the issuer says that you need to have some sort of credit history, you need to have a good credit score, you need to give your salary slips, right? And there are multiple other conditions which they put on you. But in case of BNPL, it is very easy to get this loan. There is not so much issue. For example, in case of a BNPL, they do what is known as a soft pull on a bureau, on your bureau, which means that they do not do a hard pull, which is done when you actually end up taking a loan. When you take a loan, the bank actually does a hard pull on you, in which case your credit score is affected due to the loan you take. But in case of a BNPL, a soft pull is done, and if you pay within your interest-free period, there is no disturbance to your credit score, right? So these are some benefits of using a BNPL because of which BNPL came. So if I am a customer who has a low credit score or who does not have a credit history, so is new to credit, then I do not have the route of taking a credit card. And because I do not have the route of taking a credit card, and then if I do not have the purchasing power or if I do not have the willingness to pay for my mobile phone, what do? I go through the BNPL route. And that is why BNPL is required, or that is what has made BNPL come as a playbook into the market. Got it? Some other differences which are not necessarily in favor of BNPL is that in case of BNPL, in the interest-free period also, I have to pay the fixed EMIs. But in case of credit card, in the interest-free period, I can pay what is my minimum due, post which I will be charged interest on the remaining amount. Also, as I told you earlier, there are multiple offers here, but in case of BNPL, I do not get a lot of offers. So those are some differences not in favor of BNPL. But all in all, I think you get the gist of my discussion. Why is BNPL required, right? And now the next question which I raised, why is a fintech player interested to do this and what is the benefit for the lending partner or the lending bank and NBFC? So from a fintech angle, although we have already discussed it, but from a fintech angle, actually, they are able to underwrite some customers. They are able to give loans to some customers against some purchase, which means they are giving secured loans in a way. Let me actually change this discussion. Let me start by the And now the next question is, why is a lending bank or a lending partner interested in all this? Let us imagine, let's say a Kotak Bank or let's say a Bank of Baroda. Why is a Bank of Baroda interested in a BNPL play wherein a Bank of Baroda can give home loans, wherein it can give vehicle loans, or wherein it can actually give high value loans? Why is it interested in funding a small mobile phone for me? The answer lies here. This is something which I've discussed with you in my previous video also, is that when a customer has a high credit score, in that case, in terms of interest, you're not able to charge the customer a higher interest, right? So that is why for the banks are interested to underwrite the customers at this level and this level as well, just from two angles. One is they want to actually increase their AUM, assets under management, which means their loan book. And second is it gives them option to earn higher interest, which means their ROAs will improve if the customer pays. And given Under a BNPL, they are generally financing an asset. It means that the loan is actually a secured loan. So this is why this is also a positive for a bank or a lending partner, which keeps them or makes them interested in the BNPL arrangement. That is one part of it. And another scheme or another part of it which you should understand, this applies from the angle of both the fintech or the BNPL player as well as the bank or the NBFC. You have to understand that when the customer is taking a loan, the fintech in turn actually gathers some data on the customer. So the fintech or the bank or even both, they have data on the customer. And now let's say if I buy a phone, 6 months down the line or 12 months down the line, I will need another loan, right? I will need to buy maybe a laptop this time, maybe a TV this time, maybe I will go and buy a car. And who will give me loan then? This bank will come and say, okay, you take a loan from me, we know your credit history and you paid us. So the bank will give me loan. The fintech will come and give me loan. The fintech might this time use another lending partner, right? So this is why they are personally interested in this arrangement as well. Let me add another layer of element to this. See, this is so interesting to discuss this, understand this. What essentially happened was, I did not tell you about the ticket size or the loan amount. When I am a high credit score customer and I am buying, let's say, a big purchase, the bank is very happy to give me a high loan amount as well. But if I have a low credit score, the bank is not willing to give me a high amount loan, so they will give me a low amount loan, a 10,000 rupees loan, a 20,000 rupees loan, a 50,000 rupees loan. But the greed or the interest of the bank is that once I take a 50,000 rupees loan, once I take a 70,000 rupees loan, I will develop my credit history. I will develop some sort of credit score. And post that, when I come to the bank and I say to the bank that I'm buying a car worth rupees 5 lakhs, can you finance that? When I come to the NBFC or the fintech and say that, can you finance that? This is where they are interested. Because in this case, they have a high ticket size loan on which they'll charge interest to me, and they know that I have paid in the past, so they have some faith on me. And this is why they are interested in the BNPL model also. So you have to understand this, that while BNPL can be seen as a lending model, and this is true, BNPL can also be seen as an acquisition model, right? Because for a fintech or for a bank, acquire customers is also one question which they need to solve for, and BNPL is a good method to solve that. Because in a BNPL route, they know the customer through the credit history which they develop with the customer. The customer has some faith on the fintech or the lending partner because they have already taken a loan, and hence, in the next loan, the customer and bank actually come together, or the customer and fintech can come together for this particular thing. And now, the last part of it is what I want to tell you. How do BNPLs actually do this? So, while this is a very simple topic actually, so understand this. If I am buying from Reliance Digital, which is an offline store, in that case, in their POS machine, or in that case, the at the payment counter, the folks will tell me that you can take this option. But let's say when I buy from an Amazon, or let's say when I buy from some website, which is giving me a BNPL option, what happens is that this BNPL player will integrate themselves or embed themselves in the payment page of the website or the payment page of the app. And that is how the BNPL player actually allows us to take a loan hassle free and without going to another app. We do not need to download the app. You do not need to go to the Play Store and download another app. You can directly take a loan or take a BNPL route from the app of the vendor itself, which means an embedded BNPL is what these guys is what these guys generally do, and this is how they work. So that's my discussion on BNPL, and thanks for watching.